Hello everyone! Welcome back to the Rational Investors Daily Brief Recap! Woohoo! Actually, I was pretty darn impressed. Somebody actually went and put all the notes for the daily briefs in the daily brief link. I don't know, Kevin, did you see that yesterday? We should probably get that person to actually help Murad out filling that out. I was very impressed, but that was actually a daily brief reference. So you guys in public have no idea what I'm talking about. Sorry about that. All right, let's get on with your daily brief recap. I had a nice session with the folks here. We usually start the daily brief at the top of the hour, 9 a.m. So you can see we had a good hour and a half session with the folks here today. Obviously, we had a big break in some of the cryptocurrencies overnight. Some of the actually warnings, concerns that I had yesterday actually did play out here, which kind of sucks, but oh well, shit happens. So we had to sort of talk through what we're seeing on the price charts and in the big cryptos, and also too, we had an interesting conversation about being patient and disciplined and just simply waiting for setups to actually confirm. And our conversation in a few minutes about the gold market today. We had a really great tutorial lecture on what do you take trades at trendline breaks? Probably not a good idea. Anyway, as you can see from our breadth indicator, market is trying to firm up here a little bit heading into the Labor Day weekend, which doesn't surprise me. It wouldn't even surprise me if there's even some short covering. Anybody who did take shorts on some names, maybe hopping off as we get closer and closer to the holiday weekend. Usually the Labor Day weekend, actually, you see the market catch a nice bid into the weekend. So you can kind of see that to a certain degree with a little fast. But we haven't really got a buy signal here. We really need this to violently cross back up above this low. Kind of think, stochastics, that kind of thinking. So, we're trying to find a footing, but we could very easily roll over and continue our malaise here. And how ironic that you just have about 3 or 4 stocks that are dominating the major indexes. And as long as they're darlings, I mean, you can see the breadth, S&P breadth on both short and medium term is very negative. Dow breadth, even in the short term, negative. Transports, actually, it's interesting. We might even be getting a Dow theory sell signal coming in here soon. And of course, crypto here right now, the breadth, sort of the bigger pictures, obviously not very happy with what happened in Ethereum overnight. So I'm not really like rah bull. If anything, I'm kind of like, holy shit, major cycle pivot right through a major political event. Be careful. And also too, I really don't like the way that the 1% has sort of finessed this market. I actually believe everything that you see that's happening in, say, like the stock market was pre-planned, whether it be previous dumps, consolidations, cycle rallies following that event, almost carbon copy repeating themselves. And what I also find fascinating, studying my crazy celestial event pivots, it actually looks like the pivot event is sort of the end of the selling, and once that event happens, it's a buy. So having said that, looking at previous cycle durations following breakouts, doing a bit of just very simple Elliott wave. This isn't overly complicated. It's just really, really basic study. I'm starting to see some similarities here. And if we think duration of moves, I kind of like the idea of our sort of ultimate top coming in here somewhere around the 2nd or 3rd week of September. So, so what? That's just Brian's opinion. So it doesn't really mean much. Fascinating, though, too. I've actually been bidding on things like the dogs of the Dow put options because I want some insurance, and you can see where the 50% level is way up here. I started bidding on these options. These are call options. This is an inverse ETF. I still can't get a fill here. They will not fill me. So it just goes to show I must be on to something. If these sons of bitches, the market's heading lower, I'm trying to buy call options and they won't sell them to me. That clearly says that they do not want me to try and get a position on here. Could we see some sort of insane meltdown the other direction down the road? The options trading is telling me that, yeah, that's what they are thinking. The fact that they won't give me a fill here really kind of pisses me off. But, it's the market for you. I picked my price, I picked my level, and I just got to be patient and disciplined. It's a pain in the ass. Anyway, back to our conversation here for you guys. Sorry about that. I always get so distracted. Excuse me. So, end of the summer. Funny bunny markets. Be careful here. The pros still aren't back. After Labor Day weekend, they do come. So, could we see some really wild, screwy action? Yep. I actually get the impression that they're setting some sort of trap here on the U.S. dollar index. Like I said, I really don't like the idea of going short here on this. And if anything, you can see 50% levels. That should be sort of our first question we always ask. Are we anywhere near 50% rules? And ironically enough, this is actually setting up a pretty darn big window for a counter trend rally. Because there are these important fib levels and horizontal support and resistance structural levels down below, I still think that this is some sort of trap scenario. And looking at like how long it takes the US dollar, notice they put in a W, fuck you move, then a big rally, fuck you, then an M, then another rally back up to bust that M, then they finally break it out. You notice this takes a good, maybe 4 or 5 months to actually turn the corner and go from bear to bull. Really, that's probably what we should be expecting through the end of this year heading into the next year. Is this is going to take a few months, probably. I'd even say maybe a good 3 or 4 months. It does make sense thinking about Jupiter-Saturn crosses, generational cycle pivots. I still believe that fear-greed cycle pivoted in the end of 2017, the beginning of 2018. Exactly when and where these pivots actually price-wise turn, always very, very, I'm not going to say impossible, but very, very difficult to call. But anywhere in this area, I'm definitely looking for that U.S. dollar to base and start working its way higher. And I have to say, you look around the world, I don't see a lot of economic growth. I don't see a lot of prosperity. I see a lot of, oh boy, we're going to have to start tightening our belts. Things are getting a little bit challenging. So, anyway, trade-wise, I don't mind the idea of people playing the gold market to the upside. I do think there is some sort of big panic dump here. But the problem is you got to be very, very patient and wait for those crisp levels and setups to fire. And I just think we're a little bit early here on the gold. I suppose the irony of it all, with the U.S. dollar index up as much as it is, this should be a risk-off vote. We see stocks charging higher, but interestingly enough, the broader market, not so much. And actually, I'm already starting to get little anecdotes that maybe we're starting to get things like, let's keep a real close eye on the transports. If we see the industrials move to new highs, but the transports cannot, that is a Dow theory sell signal. You see how it worked here. Dow went to new highs, transports did not. So as long as the transports are happy, I think we can continue to work our way higher. As soon as we start seeing this disconnect, then we got to start sounding the alarm bells. So I think the equity market still, path of least resistance is up. My hunch is it probably won't stop going up until the Fed says, okay, enough is enough. This is getting ridiculous. You can actually make the argument now, believe it or not, if you are a stock market aficionado, you can actually make the argument that the Fed should take interest rates back to exactly where they were back in January. Why not? If they could justify interest rates being this high with stock prices here, why wouldn't interest rates be exactly the same level with stocks at new highs? I mean, technically, this is even more inflationary than what they were here. So my hunch is probably after the new year, the Fed comes out and starts saying things like, we're going to normalize interest rate policy again, blah, 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 and this all starts to unwind again. Crash scenarios, I doubt it. My hunch is probably good old 50% rules. And I think I showed you those charts from, the Great Depression and fear, greed cycle sort of transitions. I think this is us right now. This is actually what the real economy actually looks like. We're not at new highs, folks. But this is the Fugazi. Where's the Fugazi? Here's the Fugazi in regular dollar terms. You can see, I mean, very, very, very different markets. But what I wanted to show you, and I definitely believe this, and it's the same message. And if you think about this is what our real world looks like, and this is what the non-fuck around with the supply of US dollars looks like, you can see the similarity. This is the fucked around US dollar market. And I get the impression that we need to go through probably like a year or so of this kind of pullback action, or maybe it's this, I'm not exactly sure. Maybe that's what this is, we just sort of chop around here for a year or two. And you'll know that the real big bull market, rah, this is the growth cycle. It'll kick in when we, comfortably start closing back above these old highs. And I find it interesting, actually, because this one, you can see we actually did go up, but then lost it, then came back, and then, okay, we accepted, and away we go. Interestingly enough, this go around, I think it's really simple. Right? You can see there, and obviously the pre-COVID dump there. So we're still a long way away from that. And the problem here, of course, diluted currency, not really real. This, if we even just sort of work our way around, all that really means is just sort of banging around. It's probably 20,000 is your low. Who knows? But, this is probably our playground. In fact, actually, this kind of looks megaphony, eh? So I could see, following the election, following this crazy apex event, we do something like that. This is going to be on the diluted one, and my hunch is that the indexes come down here, and everybody's freaking out again, and they go and fucking do another QE and dilute the shit out of it again to launch the market back higher. I mean, that's the world that we live in. The easiest way for you to understand this is think one word, Japanification. You want to go see what our future looks like? It probably looks exactly the same as what Japan just went through over the past 5 to 10 years. Every time the economy gets in trouble, turn those printing presses on, start. And of course, Bitcoin fans go, woohoo! All right, I have no idea if I'm doing any good here today, but I sure hope you guys are getting some value out of this. Actually, interesting, cool disconnect here. I don't know whether this is going to work or not, but I told you guys, and this is just paper trading, so it's a good illustration. We're just sort of showing you how to professionally lose money in the commodities trading business. And we've been following this oil chart all along here and just seeing if there's any M tops or inside bars or empires that we can trade. And lo and behold, we talked about this about a week ago. Boom, boom, boom. There's a nice big fat empire. And even through the beginning of the week, this actually carved out a double top breakdown. So for our purposes here, we will track how to lose money trading commodities, and we'll short this double top here. And our target, who knows, probably not very realistic, but we'll keep it open and see what happens. Our 50% level is basically almost half of what we are right now. Oh boy. I have no idea if this is the top. Who knows? But we'll just see. This is attempt number 4. And maybe we'll have to do 5, 6, 7, 8. And we'll just count up how much money we lost. And then how much money we ultimately made on finally the market hitting the 50% roll. And we'll just see whether this whole venture would have been worth our while. It's kind of a fun comment, fun illustration. as a day trading commodities trader, would I take a 10-to-1 setup here looking for the 50% rule as a day trader? Of course not. This is more like sort of position trading, trying to pick tops. And if anything, great analogy of why it's really dangerous and difficult to try and pick tops in markets. But nonetheless, kind of a fun experiment for you guys. So let's see how it goes. And we've got a short trade back on now. Let's see what happens. Which would make sense with the US dollar moving up. It would make sense that the bonds are actually enjoying a nice counter trend rally. And we you can see the line we've drawn here, kind of expecting to see that. If the oil has broken, we should see the bonds a lot happier. And the irony of it all is if the oil does break, that's going to be deflationary, which is just going to piss the Fed off even more. Interesting disconnect here with the gold. Is the gold acting more as a risk on or risk off asset right now? I get the impression right now, maybe thinking that, hey, maybe the market isn't as inflationary as the market previously was telling us. I don't know. Tough one. But gold's coming off. US dollar's enjoying a nice counter trend rally, so that does make sense. And really, the way that I look at this is you can clearly see now the market is very clearly setting this trade up now. So you don't often get this, so we're actually quite fortunate. But what the hell do I do here? Line. There we go. You can see how the market is setting up the 25 level for a trade of our little bot. So great analogy, like I said earlier. It's dangerous to take these trades that just break trend lines because this is what often happens. We might even find, and this is of course on a line basis, so slightly different. But you might even find, you might even find that the market has to walk down this trend line on the other side. I see that all the time. So just be prepared. And really now it's simple, right? We get a nice close above this 1978 and change, which probably intimates that there's some sort of peak in the US dollar counter trend rally here. And away we go. But it's not here yet. And you just don't know what the hell's going to happen in this world. And a chart jumped out at me when I was looking at it this morning. It's so typical commodity trader chart. I asked everybody on the site, and it was actually interesting. It didn't get a hell of a lot of feedback, so I don't know whether people are really learning this or not. But what's the number one rule every commodity trader should do at the beginning of every single day? What's a 50% rule? WD Gann, it's just trading 101. So when I pull up this chart of the silver, I see that the 50% level is 2069. I see that the old breakout levels, horizontal support and resistance, is basically about 19.5. Big fat round number, thinking 20 bucks. This was a V bottom. That's not sustainable over time, folks. So I'm not really too jazzed about shorting this, but wow, look at this trend line. And look at what's happening. Bang, 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 right on that trend line. That's an empire. And this is in a reload zone. I mean, if you're a professional commodity trader, I don't know if you fancy yourself a professional commodity trader, but if you are, you better respect that message. And remember, the silver guys are relentless. They're you could even argue that the silver market manipulators are mafiosos. They are evil, evil traders. Going back into the 90s, I remember just some outlandish stories about the silver market. I know there are people in the crypto community and, in trading circles that love silver. And okay, fine. You love your silver, you love your silver. But just try and respect that chart. That is a very, very dangerous chart. You coming in on the buy side here, you better have a pretty damn slick setup. You better have stops working. You better obey those stops because, like I said, the silver boys, when they get sort of the green light to fuck you, they're going to bend you over and they're going to lather up your ass with so much fucking Vaseline you're not going to know what hit you. Be careful here, folks. What do you think, Kevin? Was that a graphic picture for the good people? Kevin's not even going to say anything here. He's just like, holy shit. What did you just say? I'm not telling you what to do with your money. All I gotta say is no bloody way I'd be buying silver right there. That's for damn sure. And it's actually interesting because we're looking at some silver stocks, and everything that we teach at TRI, that's a confirmed bearish divergence. That's a confirmed bearish divergence. Willie was stupid. 50% level's a long way away from price. I mean, this stuff writes itself. It's just the problem is, if you're a bull, you don't want to hear that message right now. You shut up, Brian. Shut up, shut up, shut up, shut up, shut up. But that's just the kind of guy I am. We're not quite at TRI SOFs yet, which is interesting because Kevin and I did look at the numbers. So that in itself might be a, whew, okay, we're not here yet. But don't be surprised, people. If, come back from the Labor Day weekend, the pros see this gold market, they see this silver market, and I mean, look at what they're doing to the oil market right now. I mean, this might be done. Huge washout, utter destruction, and then they come after the silver market. Don't be surprised. Anyway, there's a word of warning for you. Okay, moving on. Stock market, like I said, and, this is scary because you don't really have the broader market moving up. Our Russell 2000 is versus the Dow. This is sort of the small cap, speculative part of the stock market versus the conservative part of the market. And if this is emming out and heading down, it's actually a risk off proxy. It's actually saying that speculators want to scurry and run and hide in big blue chip stocks, and they don't want to take the chance of venture capital. So remember we had said yesterday, maybe this might be a cute little W that's going to take us higher. Nope, fuck you. So we haven't bottomed yet here. And unfortunately, this would be the kind of scenario where, the broader, remember we said the breadth indicator has not turned back up here. Yeah, we did get a nice little bottom. We had a couple nice little names that we went and did some fishing on. If they break down, I'm getting the fuck out of there. I can tell you that for sure. But this might be a scenario here, right? You can see where we might be head and shouldersing out. And then by the time we get to that October-November event where the market is basically done, we could see some, serious pullback in that time period. And just be careful here, everyone. Buy your W's, hunt W's. If you see M's, just go, maybe I just want to cool my jets. So that's sort of stock marketing. And, interestingly enough, we were kind of commenting on some of the crypto-related names. Can they break out? Can they start to rally, right? Well, that would take this Russell 2000 versus the Dow actually turning back up. And you can see the junior stocks, they're just not doing anything here. Heading on over to corn and the crypto, and obviously why these guys are taking a bit of a pause. We kind of got punched in the nose overnight, right? Obviously Ethereum was the big punch in the nose. It was fascinating to see how yesterday we had, I don't know whether I talked about this in the public videos, do lots of sort of RSI tutorials on the site through daily briefs. Interesting how we did have a setup. It hit its 2-to-1 on this momentum push off of the RSI, but as soon as it hit the 2-to-1, oh, what the fuck? And I distinctly remember you guys saying to you guys yesterday, don't go and M out here. And sure enough, it went and M'd out here, and kaboom! That's what M's do. So, unfortunately, this is, the wind has been taken out of the sails here. We haven't really broken down. I think this is just more sort of, this was fluffy. It was all about crypto kitties. Yeah, they call it DeFi, but it's basically the same fucking circle jerk shit. And all the kids, they all get just fucking euphoric over the top, chasing the next hot coin or token or whatever the hell you want to call it. And all sort of reason goes out the window. Try and trade setups. Right? This is why it's so critical that you have to trade setups. And don't come in FOMOing on the buy side when you see things like RSI sitting above 80. I mean, technically above 70, RSI is overbought, and here it is at 80. Also, too, if you look at sort of big picture kind of stuff, this kind of bothered me a little bit. Bitcoin, Litecoin not moving to new highs, Ethereum moving to new highs, CryptoKitties, DeFi, right, all that. Sustainable? I don't know. But this is what really bothers me. So this whole move to new highs was all bullshit, right? Massive momentum divergence. Look at RSI. RSI didn't even get to the point of breaking this previous high. So, this push here was actually weaker than this push here, which is much, much weaker than this push here. This market's got trouble written all over it. But, so what? That's Brian's opinion. As I said before, I don't really have like a breakdown, but wow, what a powerful, I would call this a tweezer's top. That's just me. It's probably not the correct textbook name. Really our trading range now, especially if we finish the day here on a daily. Top of your range, obviously the highs, bottom end of the range, coming into moving average supports, probably your lows. And really shorting down here, our little RSI tutorial, and actually this is perfect. This is exactly what I had warned the community here. Coming in and shorting here, you're actually coming in and shorting very, very late. And yeah, terrible trade location. Believe it or not, I wouldn't be surprised if this son of a bitch rallies right back up to the original breakdown point. And, if we think sort of head and shoulders kind of idea, we just painted a higher high, so that's good. But bear divergence, we all know our rule. What are we supposed to think if we see bearish divergence? But I guess what I'm sort of thinking here is, and this is a tough one, but maybe something like that. I don't know whether you can see that. This trend line here, obviously key. So right now, we're sort of going through this phase right in here. Reload short zones, that'll set up a range top, if we drill down to like an hourly. The traders, like I said, probably see counter trend rallies back up top. So if we do like RLZs heading back up top, all right. So, and this is exactly what happened on Bitcoin here. My hunch is now the traders are going to be hunting this level to short. And if we draw a horizontal support and resistance just off of that M top breakdown level, we go back to the daily. So that sets up a trade location somewhere in there. Remember, you've always heard me say candle body highs, awesome trade location. What a coincidence, 78.6 is just sitting right there. And maybe we work our way up along these trend lines, and that gives us a nice little counter trend rally into that sort of mid to late September, because that's actually where I'm thinking that the stock market and stuff's going to run out of steam. So, I do like the idea that we just pulled back into key support, moving average support, previous structure. Could we dip all the way down into these lows? Sure. We're running into some support here now, and probably that low there. Certainly no trade here. But, lower time frame players, day traders, that kind of stuff, maybe off of that 13 EMA, you might see something develop to get you on the long side. And that's sort of this kind of thinking. Probably still a little bit early to think day trader longs, but you can see the inside bars trying to set up here. Maybe let that W come in. That'll be our first teal W. Then the second W that comes in will be our trade W off the 50 line, blah, 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 blah. The whole shit writes itself. Altcoins, obviously, most of the fluff in the market right now. And, oh, by the way, Bitcoin, I had said yesterday, just take this damn thing to new highs. It's a bull. Don't stop here. And it stopped here, and it broke right back down to previous lows. So we're still in this battle, and just like the gold, you can see how the breakout level, if this thing is a bull, is basically a resolution above this 12 grand. Should we start losing these lows in earnest, then that confirms an M top. I don't know whether we're really there or not. What I think is, if this is a bear, we're going to do this kind of thing where, yeah, we might dump, then have huge counter trend rally right back into resistance. And then once we get on that through that mid-September, and I'm looking for the stock market to actually top in earnest, that's where, if this serious correction comes in, that's where I'm looking for it. So, as kind of a fun market symmetry, I had painted this study for you guys weeks and weeks and weeks ago. And what's really interesting is, we were kind of saying, well, maybe we get a rally up here. And at that point, we called them Moon Boys. You never know what the hell the Moon Boy story is. Now we can change Moon Boy and insert DeFi Boy. So this was the Moon Boy conversation, the DeFi market. The problem here is that, of course, you can see back and forth, back and forth, back and forth, and then, oh boy. We went up here, so that's good. We built in a bit of a cushion. I get the impression this sort of part of the cycle does nothing more than take us back into here. If all hell breaks loose, back down to reload zones, and then we can actually start thinking about investing at or below cost of production. Right now, this is trade or trade, 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 trade. But if we're lucky and the wheels really fall off the bus here into September, late September, October, which I think is going to happen, we might actually be given a buying window. And you know what I found really interesting to sort of finish off this conversation today? I'm a big fan of these celestial cycles. We had a big one here. The end of March, April 6th, I believe, was the actual celestial event. Then we had another one here in July. But you know what I'm actually thinking here, believe it or not? I'm actually thinking, especially if we look at the stock market, I'm actually thinking that these celestial events are pivot bottoms. And they actually show the end of the previous move and the beginning of the next one. So if we actually pull up a chart and plot these on something like the stock market, gee whiz, look at that. Celestial event, market bottomed, up we go. Celestial event, market bottomed, up we go. Maybe we have a nice pullback. You remember our study of time, previous bull bear cycles? Looks to me like pullback, celestial event, buy signal. That's actually what I'm thinking right now. Okay, everybody, I think I'm going to leave the rants at that for today. Obviously don't chase. Hopefully you didn't get too hurt in all that CryptoKitties nonsense. It's never a dull moment, never a dull time in the market, but understand, don't chase, don't chase, don't chase. Even something like this ADA, probably a pretty good example. And if you really want to buy ADA, right, reload zones, gee whiz, it came back down to a mountain man level and put in a W. What a surprise. So remember, don't chase, be patient, work your bids. You want to start adding more reasons when we get into trade location? Fine by me. All that does is it gives you more edge, which of course should reduce your anxiety. And that's the whole point about trading setups, working with plans, is that you can come to the market and act rationally and logically and coolly and calmly on a daily basis. Okay, I think I'm done ranting. Holy crap. We started that video at 9 o'clock and I did basically a full rant for the site today, so I've been blabbing away for a couple hours here. I think I'm done. Have yourselves a great day, everybody. Probably a really great image to leave off on. PMA for the win. Get your jelly, your jars of Vaseline ready if you went and FOMO'd bought. Because I don't want it to be a painful experience for you. So try and get as much lube as possible so that at least when you do get fucked from chasing and from FOMOing, it doesn't hurt. But don't FOMO, don't chase, don't chase. All right, everybody. Have a great day. All the best. PMA for the win. Oh, by the way, our raffle is still going. So if you would like a free seat in our upcoming fall semester, get your butt on the page. Write down your name, your email address. The link is in the description here of the video. And you got 4 days left. In 4 days, the big raffle happens. All right, everybody. All the best, and bye for now.